The price of eggs are down to $3.45 a dozen. Thus ends the good news. This is a good news channel, so I have to start. I have to have good news. There isn't a lot of good news today. The stock market in general is uh, tumbling, and good reasons, but also kind of what I projected a couple of weeks ago that we would be up and down over these next weeks until the tariff situation is clear. Again, to me, the tariff situation doesn't seem to warrant as much negativity as there is out there, but it is uncertain. We've also got the Ukraine war that continues to be uncertain, but we had the Ukraine war, which was just going to be bumbling along 6 months ago. So the fact that it's uncertain, the uncertainty is heading towards potential peace would seem to be a positive. But markets hate uncertainty. So that's what we are this morning. Tesla is almost certainly going to be testing the 222 this morning. That was the very first thing I wrote on my script this morning. And gosh, that was when it was still at 228 or something. Now we've already tested 223, so the 222, it's really irrelevant at this point. But we're certainly going to be testing that. Will we go below 222? That probably depends on news and the news cycle over the next few days, but I doubt if we'll go below 222 today, and we could end up significantly higher. That's kind of the trend I'm looking at right now in the market, but never, that's not even a gut feeling. That's just kind of like maybe. The Mag 7 are also all under huge pressure this morning. That is a big factor in Tesla being down, but there's plenty of other reasons. So while the momentum on negative news from analysts is in place, nothing has changed in my long-term analysis. I'm still assuming there will be a Model Q, and that will be a big catalyst. And then you're going to have the unsupervised self-driving, and you will have the robotaxi rollout. All of those things are going to be massive. Those three things will be massive catalysts. And so I'm still believing that combined with the beautiful Juniper and all of the stuff that is coming out in 2026, like something called Optimus, that we're still headed towards my number. I haven't changed one thing in my number. We're still sitting at 109 PE. All right. Right now, we're still at 109 PE. So could we go lower? Of course we could. But the 109 PE tells me that the vast majority of the people that follow this stock still believe my analysis, which is 700 plus by the end of the year, plus one being the unsupervised, plus two being the Optimus reveal, which could take us over 1,000. AJ says this morning. He says Tesla weakness continues for the same reasons. Elon's political involvement, organized, orchestrated protest, vandalism, etc. Tesla is a high-value PR target. It continues to unsettle investors by all these things going on. Number two, sales weakness, again, driven by Model Y changeover. All leading sales indicators point to a positive surge, a massive surge in March sales from January and February lows. And I would say continuing into the rest of the first half, I think we'll see excellent sales from all the reasons we've talked about. Republicans, Juniper, go on and on and on. Okay. He says next, low reported faraway market sales. The farthest places from the factories, driven by the rational strategy of not shipping to those faraway locations when you first have your new Model Ys. You're going to concentrate on the local markets first. This obviously caused exports, in particular from Shanghai, to drop dramatically. So when you see articles talking about that weakness, you got to take into consideration that that's just nonsense. Analysis, Bank of America and UBS, we'll talk about in a minute, both have dropped their forecast. That totally makes sense. But as AJ says, why are they dropping their forecast 2 weeks before we get the numbers? Why weren't they dropping their forecast when it would have really been a forecast? So, it's like, yeah. So Gary Black has this. He says, look, despite mainstream media accounts, old stream media accounts, that Tesla US observed sales and traffic are way down because of Elon's political rhetoric and Doge activities. Actual credit card data, listen to me, actual credit card data tracking US weekly sales through 3/9/2025, presented by Bloomberg, show no such degradation and in fact show a spike up last week, just prior to President Trump announcing he would buy a Tesla. So we would expect, therefore, to see even more spikes up. This is me talking now, not Gary. We would expect these spikes to continue up in the U.S. market based on all the publicity, the positive publicity coming out of the Trump effort and, of course, Kim Kardashian and her effort. Gary Black continues. He says, Wall Street first quarter delivery estimates have fallen to 405,000 from 429,000. That is probably still too high. Based on everything that I'm reading, I think we could be under 400,000. But remember, this is compared, deliveries now, I'm sorry. And they've also reduced the deliveries expected for the year to 1.913. They had been, compared to actual, I can't read his writing. Okay, Tesla China raised the price on its revamped Model Y long range. So I'd seen these a note somewhere that there was 0% financing in China, making people worry that, but I can't find that anywhere else. And he's saying Tesla China's raised the price of its revamped Model Y long range by plus 3% to 313,501 from 303,500, signaling strong demand for the refreshed model. Last night's China weekly insured registrations came in at 15.2, which was exactly what was expected and respectable, the highest so far this year. And it might have even been higher if Model Y production, if they weren't having Model Y production issues right now, which were apparently, according to Gary, fully resolved, but normal for this level, this point in the ramp. Now, what about Gary Black continues. These are things that are potentially weighing on the stock today, and this would be one that I would agree with. BYD claims its new 1,000 kilowatt superchargers can charge as quickly as filling up with gas. They're 4 times as powerful as the current 250,000 kilowatt chargers from Tesla. Now, Tesla is planning to roll out a 500 kilowatt supercharger later this year. The reveal of BYD's new Super E platform sparked share price rally for BYD, as well it should, jumping by as much as 4% to hit a record high. Lengthy charging times and range anxiety are still cited as the main concerns for BEVs. And but everybody's working very hard. Everybody estimated, certainly Kathy Wood and others estimated and recommended and suggested that we would eventually get these kind of charging rates. I'm sure Tesla will get there as well. It's really not an issue for those who own their BEVs, but it would be great to be able to say worldwide to everybody that's trying to make a decision, no, you can charge just as fast as you could charge at a gas station. Teslarati has this morning. A look at the Tesla news cycle over the past few days would show that one of the biggest stories around the electric vehicle maker involved the results of a German publication survey that they did online. As per the reports, a survey of over 100,000 online readers had shown that 94% of the people surveyed were not willing to buy a Tesla, and only a minuscule 3% were still willing to consider a vehicle from the American EV maker. But what happened was the alleged drop in Tesla interest in Germany because of Elon's conservative politics. The survey itself received polarizing reactions among social media users, since its respondents were self-selected. But what happened was that this poll remained open after that report, and they got more and more results coming in. And as of this writing, a total of 439,000 respondents have participated in the survey. 69% of the study's overall respondents stated they would still buy a Tesla. And that sounds to me like that would be right. A total of 128,000, 29%, said they would absolutely, no way, consider a Tesla. But that, I think, is even baloney. I just think those people are being emotional, and their minds will not necessarily stay in that position. So that was an interesting complete flip on the negative story from just a couple of days ago. Barron says this morning: a drop Tuesday came from RBC. We talked about this earlier. RBC analyst Tom Narayan, he cut his Tesla stock price to 320 from 440, kept his buy rating. Of course, 320 would be almost 50% up from here. Much of the attention around Tesla has centered, he's quoted as saying, much of the attention around Tesla centered on its recent performance in January and February in Europe and China. Early 2025 sales results for Tesla have been weak, including leading Wall Street to cut estimates for first quarter and full year deliveries. He says, we think fears about demand could be overblown. However, that said, in this report, we lower our full self-driving pricing and robotaxi penetration assumptions, added the analyst. So they think Tesla charges U.S. drivers $100 a month. He thinks that'll drop to $50 a month in the future. I don't think that's fine. I don't think that all that would do would mean it would dramatically increase the number of people that would take it. So maybe the profits would be the same or maybe even more. The stock's decline in pre-market trading came after shares fell 4.8% on Monday, down another 5% today. Mizuho analyst Vijay Rakesh cut his full year delivery estimate to 1.8 million vehicles from 2.3 million. Tesla delivered about 1.8 million cars last year, of course, as you know. So I think this is, again, ridiculous. I believe that Tesla will continue to sell a lot more vehicles this year than last year for all the reasons that you know. We believe Tesla sales woes are the result of a deterioration in geopolitics, brand perception, share loss due to stronger competition, and softer than expected demand for the Model Y refresh. Based on what? He kept his so sorry. He kept his buy rating on Tesla stock, but cut his price target to 430 from 515 while maintaining his buy rating. So he's still pretty dang bullish. Overall, Wall Street expects the EV maker to deliver about 2 million cars, down from an expectation of 2.1 million a few weeks ago. The pattern looks similar to the first quarter. Wall Street expects about 420,000 deliveries, down from 470. That is way too high, and I don't think that's even Wall Street anymore. I think Wall Street's still around 407, and I think we'll be under 400. Tesla delivered about 387,000 cars in the first quarter of 24. Tesla may not grow deliveries year over year after posting a record fourth quarter. Falling estimates have weighed on investor sentiment. Coming on Tuesday's trading, Tesla stock was down 41% so far this year and down 5% since the November election. And it doesn't say it's up. I forget, I wrote down the number earlier. It's up 23% since 1 year ago today. Investors were excited about the potential for the second Trump administration to give Tesla a boost, and it will, and it does. But weak sales to start the year have investors worried. Shares are trying to avoid their 9th consecutive weekly loss. Falling for 8 straight weeks is already the longest streak on record. And again, one has to ask the question, what does it matter whether it falls week over week? What matters is where it is and how that charts out according to the techies, and how it is overall, even for non-chart analyst type folks like me, there still is trends and historic ways that we look at things, and going down 50%, as Brian Wang says, going down 50% from an all-time high, especially one that was based on 100% story, is not unusual. This is Randy Kirk, by the way. I know it's a very long show today. I hope you'll stick with me because there's so much interesting and stuff you need to know. But hit the like and the notify and all that stuff. Subscribe and join Patreon. I do a lot of work here. Our respondents to the March CNBC Fed survey have raised the risk of recession. Who would have said? Who would have thought? I don't know. Do you watch the channel because of my accuracy on my predictions? You should. I think I've been really accurate. They cut their growth forecast for 2025, raised their inflation outlook. That is incorrect. The inflation thing is done. Inflation's over. Take my word for it. Inflation is done. Much of the change appears to stem from concern over fiscal policies from the Trump administration, especially tariffs, which are now seen by them as a top threat to the U.S. economy, replacing inflation. The outlook for the S&P declined for the first time since September. I do not see tariffs as a threat. I think the tariff thing will be a nothing burger. I do think that cutting $1 trillion from federal expenses, even if that full cut doesn't take place until later this year, is going to impact people's decisions in the first quarter and second quarter. So somewhere, probably, I'm thinking it's really the second and third quarter that we see maybe GDP negative. Might not even, it might only be the second quarter, just the second quarter. And by the third quarter, all the efforts of the Trump administration will be in place and we'll start to see the gains. That's kind of where I'm seeing it right now. First quarter, probably still slightly positive. Second quarter, definitely negative. Third quarter, maybe rebounding enough to get out of negative territory. The 32 survey respondents, who include fund managers, strategists, and analysts, raised the probability of recession to 36% from 23. The January number had dropped to a 3-year low and looked to have reflected the initial optimism following the election of President Trump. They didn't remember the first. You got to watch history. You got to watch what Trump did the first time. But like many consumer and business surveys, the recession probability now shows considerable concern about the outlook. We've had an abundance of discussions with investors who are increasingly concerned that the Trump agenda has gone off the rails due to trade policy. I got to look it up. I'll report maybe tonight with Nicholas Gibbs, what percentage of the overall U.S. Retail sales are based, come from imports, and I think you're going to be shocked how small it is. Consequently, the economic risks of something more insidious than a soft patch are growing, according to Barry Knapp of Ironside's Macroeconomics. The degree of policy volatility is unprecedented, said John Donaldson, director of fixed income at Haverford Trust. The average GDP forecast for 2025 declined from 1.7 from 2.4, a sharp markdown that ended consecutive increases in the prior surveys dating to September. GDP is forecast to bounce back to 2.1 in 2026, in line with prior forecasts. You can write this down. Both this year, GDP in fourth quarter will be much higher than expected, and 2026 will be off the charts. The risks to consumer spending are skewed to the downside, said Neil Dutta. This I agree with. Alongside frozen housing market and less spending across state and local governments, there is a meaningful downside to current estimates for 2025 GDP. I think that is 100% correct. I think that is right. The overall GDP increase for 2025 will be less than expected, less than has been proposed. But fourth quarter will be fantastic. The Fed rate cut outlook. Most continue to believe the Fed will cut rates at least twice this year and will not hike rates, even if there's consistently higher prices. 3 quarters forecast 2 or more quarter point cuts this year. Part of the reason is that 2/3 believe the tariffs will result in one-time price hikes rather than a broad outbreak of inflation. Well, hallelujah. But the policy uncertainty has created a wider range of views, and the Fed, do you know why I said hallelujah? Yes, you do. I mean, because it's a one-time price hike. It's not inflation. Still, higher tariffs and weaker growth are a dilemma for the Fed. Powell is really stuck here because of the tariff overhang, says Peter Bukvar, Chief Investment Officer of Bleaky Financial Group. If he gets more worried about growth because of these tariffs and cuts rates as unemployment rises, but then Trump removes all the tariffs, he's jumped the gun. No, Trump is not going to remove all the tariffs. That's the last thing he's going to do. The only reason that would happen is because other people remove theirs. More than 70% of the respondents believe tariffs are bad for inflation, jobs, and growth. But they're wrong. 34% tariffs will decrease U.S. manufacturing, with 22% saying they will result in no change. 37% of respondents believe tariffs will end up in greater manufacturing output. Thank you very much. More than 70% believe the DOGE effort to reduce government employment is bad for growth and jobs, but will be modestly deflationary. No, it'll be very deflationary. A global trade war, haphazard DOGE cuts to government jobs and funding, aggressive Immigrant deportations and dysfunction in D.C. threatened to push what was an exceptionally performing economy into recession, said Mark Zeddy, chief economist for Moody's. Yeah, an exceptionally performing economy that was based on government jobs and government spending, which was absolutely impossible to be sustained over time, or we would go bankrupt. Hi. Okay. This is from Reuters. U.S. single-family home building rebounded sharply in February, but rising construction costs from tariffs in lumber and lumber shortages threaten the recovery. Actually, lumber was down this morning. I happened to notice this in the commodity market. Single-family housing starts, which account for the bulk of home building, surged 11.4 to a seasonally adjusted rate of 1.1 million. Units last month. Data for January was revised to show home building declined to 995,000 for again, these are annualized numbers. So you had this big decline, probably because of what? Because of weather, and now it's rebounding. So it's kind of a mixed bag in terms of whether it's important or not. But 1.1 million is an okay number of housing starts. President Donald Trump this month imposed and later suspended a 25% tariff on most goods from Canada and Mexico, which would have pushed up U.S. duties on Canadian lumber to nearly 40%, tariffs on Chinese goods, etc. We know all this. Let's skip ahead. There have been anecdotes of workers not reporting to duty on construction sites. People will show up. Undocumented immigrants account for 23% of construction labor. With new housing inventory levels last seen in December 2007, which was already historic lows. Keep this in mind when you see these things. In December 2000 lows, we had historic lows in inventory. Builders may not have no incentive to break ground on new single-family housing projects. Permits for future construction of single-family housing fell 0.2%, which was not surprising. That's kind of pretty much what I think I said last Sunday. U.S. import prices, new story. U.S. import prices increased 0.4% in February, following a 0.4% advance in January, according to the Labor Statistics Department. Higher fuel and non-fuel prices in February contributed to the overall increase. U.S. export prices rose only 0.1% in February, following a 1.3% advance the previous month. All imports, excluding fuel, advanced 0.3% in February, following an increase of only 0.1% in January. Higher prices for non-fuel industrial supplies and materials and consumer goods more than offset the lower prices for capital goods. And then this is from Market Watch, breaking just before I came on. Industrial production rose 0.7% in February, according to the Federal Reserve. The gain was above economists' expectations of 0.3%. Manufacturing alone, which makes up 3/4 of total production, jumped 0.9% in February, but it only had a 0.1% rise in the premise. Now, this is good news. I hope this is true. I hope we can continue to see manufacturing picking up. Capacity utilization, however, for manufacturing, while it increased by 0.6 percentage points, it was still only at 77%, a rate that is 1.2% below the long-range average, much less being above average. Okay, so after all of that said, let's see what the markets are doing now. We have got Tesla now at 225.62, significantly up above the 223 it was a few minutes ago, but still down 5.21%. The Dow Jones down 0.42% this morning, NASDAQ down 1.7%, S&P down 0.97%. But let's look at these magnificent seven. NVIDIA down 2.92%, Meta down 4.61%, Amazon down 2.45%, Google down 4.32%. So you can see that Tesla is in good company this morning, although more than, but then last week they were more than on the upside. So when this all switches again, Tesla will probably outrun the other magnificent seven people. Interestingly, Apple this morning is up 0.31%, but they're still down significantly from their all-time high recently. The Cathie Woods are almost all down, except for Square, of course, which is up 0.67%. Square is going crazy. I don't know what I know. I keep saying I'll look it up, but I don't. But ARC down 3.4, ARC-G down 3.7, CRISPR down 4.46. I mean, it is a kind of bloodbath this morning. Now, given all of that, you would think that bonds would be coming down, and they are finally. Okay, good. But it's only zero point 0.2 basis points. So we're looking at 4.30 still. We really should be at 3.9. The 2 year is also down about 1 basis point, and the 1 month, I'm sorry, the 2 month is flat. All right. So still not getting what we need out of reduction. Maybe if the Fed actually cut a quarter tomorrow, that would help. I really still think there's a chance. I mean, these numbers, they could justify it, and they anyway. Okay, what about oil? We've got oil up 12 cents, so we're still sitting at 67.70. You got natural gas up 1.49%, so back up above $4 at $4.08. Gold up 28.50 at 30.34. Did not call that one. Surprised that there's this kind of momentum after breaking through 3,000. Silver also $34.61, up 0.88. Copper continuing up, still not breaking through 5 though, up 0.33 this morning. Dollar mixed, and Bitcoin down 2,808 at 81.7. And there you go. That is the whole 9 yards. I tried to get this under 3 hours. I hope you stuck with me. Later on today, Nicholas Gibbs, as usual, not 100% sure what is going to be at the 7:45 hour, but I promise you amazing things. It might be Brian Wang. That is a likelihood, but we'll see what happens as the day progresses. Having said all of that, it has been great talking to you this morning.